How do passive investors get paid in a multifamily real estate syndication? You've invested in the deal, but what happens now? In this video, I'm going to walk you through how you get paid when you passively invest in an apartment syndication. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about how passive investors make money when investing in syndications. And there are three ways I want to talk about in this video, and method number one is distributions. Now, this is a long word to write out when you're talking and doing a video at the same time. So distributions. Now, what are distributions? Distributions are really the free cash flow produced by the property. Now, the free cash flow can vary. Maybe there are extensive renovations going on. Some of that cash flow is going towards subsidizing those renovations. There's reserves that need to be kept up. So basically, it's the leftover cash flow produced by the property that is then paid out. Now, there are two sides to a real estate syndication, and I've covered this in other videos. I'll put a link right up here to a video I did explaining about how a syndication works in the different sides, the general partnership and the limited partnership. For the purposes of today's video, the limited partnership, the passive investors, that's what we're talking about today. So distributions, the free cash flow produced by the property, how are these paid out? Well, there's two common ways. So you can have these paid out monthly, on a monthly basis, or quarterly. You know what? Quarterly. There we go. Monthly and quarterly basis. And how are these divided? You'll hear the term split used quite a bit when we're talking about GPs and LPs and how these monies are divided. There is no industry standard because every deal is unique. Maybe in a heavier lift deal, so there's a lot more legwork that's going in. Maybe it's a heavy lift, lots of renovations and construction. In that sort of situation, the general partnership, the people running the deal, will have a higher split because there's more legwork, there's more oversight that's needed. Maybe if it's more of a lipstick type of renovation, a lighter rehab, the split may sway less to the GP and more to the limited partner. So example splits could be 70-30 in favor of the LPs. It could be 75-25 in favor of the LPs. It could be 60-40. It really depends on the people running the deal. It really depends on the opportunity, and you can't really make a blanket statement. But I would say, generally speaking, most of the time, really, you'll be dealing in that 70-30 range. But I almost contradicted myself there. But if we're just going to talk about generalizations, 70-30 is a good general split to use. The second way passive investors make money in the syndication is through refinancing. A refi. And this is more of a return of capital than profit, but I wanted to keep this in here because it's an important piece of the puzzle. So let's say the syndication is following a value add strategy, and I'll put a link right up here to a video I did explaining all about the value add strategy. So we're forcing the appreciation of the property, pushing the rents up, compressing those cap rates, and this is how we control the profits in the syndication. So we've done all the work, and now it's time to pull out some capital, and we're really adding more debt to the property. What does this allow us to do? Well, if we're adding more debt to the property, we are getting a big check from the lender, and we're able to return money to the investors. So you know how I said this is more of a return of capital? So let's say somebody invested $100K in the syndication. Maybe through a refinance, we are able to return $30K to the investor. So now the investor only has $70,000 left in the deal, and that's going to really boost up their returns. This is a happy day for the investor because they were planning on having $100K riding in the deal for the 5 to 7 year hold period, whatever it was, and now they've just had $30,000 returned to them. Now they can ride out the rest of the hold period, whether maybe it's another 4 years or 3 years, with only $70K. So this is really going to boost up the returns, and now they have the $30,000 to do something else with, maybe invest in another deal. So this is always a great scenario. One thing to keep in mind, and I've talked about this before, is you should always be wary whenever a refinance is worked into deal underwriting. You can never guarantee that it's going to happen. So having a refinance and a return of some capital, maybe you can get 70% of your capital back on a refinance. It's all going to depend on the deal itself. I just use this as an example. But if you ever see a refinance worked right into the deal underwriting, just be cautious, because there's no guarantee that will happen. So if it's worked into all the return numbers, just be wary. Just ask a couple questions. The third way we make money as a passive investor in a multifamily syndication is when we sell the property upon sale, or divestiture, if we want to be all fancy. So what happens is we've followed the value add approach, we've pumped the value, raised the rents, compressed the cap rates, we have increased the value of the asset, and now it's time to unlock all the equity that's built up. So maybe we've done a refinance, returned some capital, but now we have a big chunk of equity sitting in the property and we want to access it, so then we can put it in a new deal, run through all the depreciation, once again go through all of that exercise with cost segregation, and start the process all over in a brand new deal, making sure our money is working efficiently and hard at the same time. So what happens in this case? Well, we sell the property, a new buyer closes on the property, and the sale proceeds are again divided based upon the split we talked about. So it's just like cash flow, it's the same thing. So it could be a 70-30, 75-25, 60-40, depending on the situation, and that's going to be divided both between the limited partnership and the general partnership. So one way I think about, and this is what I tell all my investors when we talk about distributions and sale proceeds. So your monthly distributions or quarterly distributions, depending on how the syndicator has set it up, it's almost like the breadcrumbs, right? It's, who was that? Hansel and Gretel, I think, going through the forest with the breadcrumbs. So each month you get your breadcrumb check, whether you're earning 7%, 8%, 9%, 10% on your money a year during the hold period. These are just your breadcrumbs all along, and then you get the big cake at the end. Here, we'll put some candles on the cake. The big cake at the end, and this is where you get your big check. So real estate's awesome because, especially with multifamily real estate, you have the strong cash flow, you have the appreciation, especially if you're following the value add strategy, and then you have all the tax benefits that really put more money in your pocket and significantly reduce your tax liability. So you're getting your cash flow all the way along that is significantly better than the majority of investments out there. And then at the end, you get your big fat check, and then you can roll it back into a brand new deal. So if you're not quite sure what makes a good deal or a great deal when it comes to multifamily, or if you just want to feel more confident, I want you to check out Discover Multifamily. It's a brand new 8-week course I just launched. I'll put a link right down here, discovermultifamily.com, and it takes you from square one, step by step, all the way through the investment process so you can make better, more confident investment decisions. And I want to personally invite you to join our free Facebook group. I'll put a link right down here. It's full of great people interested in learning more about multifamily and investing in multifamily real estate. And if you are an accredited investor and you're interested in learning more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call with me. If you liked this video, if you found this useful, hit the like button, leave a comment, let me know what you think, and until next time, happy investing.